Markets trade flat amid volatility. Sensex below the 73,300 mark, while Nifty dips below 22,100 after hitting fresh highs. Most sectoral indices trade in the green, with gains led by the PSU pack, media and oil and gas. On the other hand, IT, real estate and pharma under stress. Jyoti CNC makes a strong debut on the Lal Street. The stock lists at a 12% premium to its IPO price on NSE. And Adani Group offers bigger flats to residents of Dharavi as part of the redevelopment project. All eyes on the HDFC Bank Q3 results. The asset quality is expected to remain stable with steady loan growth.
Hello and welcome. This is Hot Money. I am Agam, Vakil, and with me is Hiral, Dadia. Well, this show we take you through all the stocks which are buzzing in trade, and of course, for now, to take a look at how markets are panning out. Well, flat at the moment as far as the Nifty and the Sensex go. We have seen a relatively quiet day of trade for now, and especially the Bank Nifty, which of course will be in focus on account of HDFC's earnings, which potentially could come through towards the end of the session, most likely post-market hours. That's where all the activity is slotted to be held. But for now, of course, we're continuing to see a lot of traction with respect to the benchmarks. And in the benchmarks, we do have a handful of gainers out there. To take a look at BPCL, which is up around 4%. We have Titan, which continues to advance by as much as 2%. Hero MotoCorp has once again gained traction, and ONGC is the other way, which is up and about, advancing by around 1.5%. Also want to address quickly what's happening in the broader markets. Well, there have been a handful of names which are up and about on heavy volumes. Do remember that IRFC was one of those counters which did see a sharp up move yesterday, and it does seem like it's moved and advanced by 10% for yet another day, once again on big volumes. Yes Bank is the other one, that's up and about by as much as 5% as well, and Paytm advances by around 4% as we speak. That's as far as some of these names go in terms of gainers, and on the losing end, we don't have too much on an absolute basis, but we do have Oracle Financial Services, which declined by around 3%. Vodafone Idea also down by just as much, and 2.5% decline for Syngene International. Very quickly, let's address the advanced decline ratio. At least about a couple of hours ago, the advanced decline ratio was nearly 1:1, and has this changed? That's something that we need to ascertain because that is largely what gives you an idea about the sentiment of the market. And for now, of course, as you can see on your screen, the declines have ever slightly pipped advances at the moment as we speak. So it's still a 1:1 ratio, but it's gone in favor of the declines, and that perhaps could be something of a challenge, at least in the near term, Hiral.
Right. So this is going to be interesting to watch out for as well, Agam, from here on. But let's actually shift focus to stock-specific action as well. Couple of counters that we will be talking about in today's day of trade. Aster DM, that stock is seeing some smart moves. Angel One, defense companies are in focus. IRFC from the PSU back. PNC Infra on the back of an order win, as well as a Jyoti CNC on the listing. In fact, one more stock I would want to add to the kitty is a LIC as well, which has crossed the listing price, but it's still away from its IPO price. Joining us on the show to discuss these stocks, we have Sunny Agarwal, Head of Fundamental Equity Research at SBICAP Securities. Sunny, good afternoon and welcome to the show. Before I come to you with a specific counter, let's look at Aster DM on the screens. The stock has actually hit a life high in today's day of trade. Now, they're clearly considering a dividend, and this is after the stake sale in their Gulf business. My colleague Varsha joins us to give us more about what is this all about, what is the kind of dividend that they're issuing. Varsha, over to you.
Good afternoon, Hiral. So as you rightly said, so Aster DM, if you see the share price has surged nearly 13% to hit its lifetime high. Now, company said, this is on the back that company said it will be distributing a majority of its proceeds for its stake sale in Gulf business. Also, the board will consider the distribution of 70 to 80% of the upfront consideration, that is of $903 million as a dividend to a shareholder, which will be in the range of rupees 110 to 120 a share. Now, this is on the back that the company does not require the proceeds to fund its growth plans in India. Also, if you see in 2023, now let's just have a little background. The Dubai-based Aster DM Healthcare has approved the sale of business in the GCC region to Alpha GCC Holdings for $1 billion, and of this, $903 million will be received at the closing of the transaction, and rest will depend on the fulfillment of the conditions. Now, if you see the analyst recommendation of all the 7 analysts tracking the company, all have a buy rating with an return potential of -2%. And if you see the stock performance in last 1 year, company has given a return of almost 92%, while the 6-month performance has been 38%.
Thanks, Varsha, for getting us the details. Clearly, if you see from a 12-month perspective as well, nearly the stock is doubled. Sunny, let me come across to you with regards to an Aster DM. How are you looking at the pharma pack closely, and specifically with regards to Aster DM now that we are going to look at 2 different entities as well?
Yeah, good afternoon. So definitely this demerger was already in plan and discussed with the street, and now it is getting executed. And I think on a per share basis, the dividend payout will be very healthy to the tune of maybe 90 to 100 rupees per share. So that's a clear cut, a very decent 20% dividend yield till the time a record date is announced. And moreover, what I feel is that demerger will allow shareholder to get a direct pure play India story on hospital expansion. And on hospital side, India operations has been doing pretty well. I think during the last 3-4 years, there we have seen a robust growth across the top line as well as on EBITDA front. So right now, India business is generating around 450 crore, 480 crore kind of EBITDA, and ROE, ROCE of to the tune of 20%. So I think the demerger move is in line with expectation, and that is the reason we are seeing a positive uptick in the stock price. If somebody want to invest, deploy a fresh money in the Aster DM, one can ride for the dividend play, obviously, but one has to keep in mind that post-dividend exit, we may see correction also in the stock price. Taking call on business, obviously the business, entire hospital sector is doing well, and so as the Aster DM also. So if somebody is a medium to long-term investor, he can definitely look at the company on and can follow buy on this strategy.
Sure. Well, that's your view as far as Aster DM is concerned. Very quickly, want to address what's happening with KIOCL. We understand its pellet unit in Mangalore will resume operations. That's the latest coming in as far as KIOCL is concerned. But we move on and talk about angel broking. Possibly one of the biggest movers in not just the last 1 year, but potentially the last couple of years. And this is, of course, on account of increased number of traders that we have seen, and of course, many market participants that come into the fray, which is why your operational numbers have looked substantially higher for angel broking over the course of the last 1 year. But while the revenue has grown, we are looking at some amount of challenges with respect to margins. I'm going to get in my colleague Harsh Seta to give us an update on how the quarterly numbers have panned out and what the challenges here are. Harsh.
Well, yes, Agam, so you're seeing good numbers on a year-on-year basis, but the better way to look at this is probably sequentially. You're seeing a 1% uptick on a quarter-on-quarter basis where revenue is concerned. EBITDA is actually fallen around 13% sequentially. That's on the back of higher OPEX. Let me talk a bit more about OPEX. They've been spending, or Angel One has been investing, spending, however you want to put it, on both tech as well as, more importantly, on customer acquisition. That's something they've been spending on. They've also suggested that they have been switching with regard to some of their plans which they have sold to current customers, and that is also probably what a modification of the intraday structure is probably also what is leading to slightly muted growth where EBITDA is concerned, and profit after tax is actually down 14%, largely in line with that EBITDA number. You're looking at client base though, which has gone up 14% sequentially. That's a positive. Clients now just below the 2 crore number, almost a 20% market share overall, and you're looking at demat accounts which are up 80 bips on a sequential basis, 241 bips on a year-on-year basis in terms of market share improvement. So you're continuing to see market share improvement and gains coming in here. Your active clients have also gone up. They are at 53 lakhs. So some of those trends playing out, but on an otherwise softer quarter where the operational update is concerned from a business standpoint.
All right, Harsh, thanks so much for getting us those updates on Angel Broking, or Angel One as it is called right now. Well, Sunny, your view on Angel One, or if you track this one, and what is your assessment on the broking industry?
Yeah, definitely a remarkable shift from a traditional broker to a digital platform as far as Angel One is concerned. During last year, we have seen a massive increase in profitability from maybe annual company. If I remember, company used to generate 200 crore kind of annual profit 3-4 years back, and right now annual run rate is close to 1,000 crore. And what I believe is that this quarter top line is in line with expectation. Only issue is with front loading of costs pertaining to the newly set up asset management business. At the same time, they have added manpower to at the same time they have added manpower, and they have spent on advertisement to garner more market share as far as new account acquisition is concerned. So the benefit of all this will be seen maybe 6 months down the line, and that is the reason we have seen that the PAT is little bit subdued as compared to the growth in the top line. But having said that, if somebody want to bet a fresh money on Angel One, what I feel is that currently stock is trading at 30 times price to earning multiple. So maybe further 10-15% correction will offer a better risk-reward ratio as far as Angel One is concerned.
All right. That's your view on Angel One. And on that note, we slip into a short break. But on the other side, we talk about more stocks we have on our radar. Stay tuned in.
Welcome back. You're watching Hot Money. IRFC, that's one of the stocks that is on our radar. A 37 to 38% up move is what we've seen in the last 5 trading sessions. Today as well, the stock is buzzing in trade up about 10%. Now, what's happening with this counter? Now, in today's session, you have multiple trades that have happened. 22.3 crore shares have exchanged hands. Now, the largest 4 trades, which were at 40 lakh, were traded at a price band of around 145.5 and an average of around 140.4 per share. Clearly, the railway stocks have been buzzing as well ahead of the budget and the kind of the capex outlay that the government has already planned. Sunny, let me come across to you on a IRFC. With the kind of run-up that we've already seen, what would you advise an investor who's already holding an IRFC do, and someone who wants to actually enter the railway space? Would this be a preferred bet, or would you have any other recommendations as well?
On IRFC, definitely what I feel is that valuation are very stretched. I mean, at current market price, the company is commanding market cap of close to 1.9 trillion rupees, 1.89 lakh crore rupees, which is higher than, I feel, Bank of Baroda market cap. On price to book, the company is trading at 4 times price to book. Even on price to earning multiple, the annual profit which the company generates is close to 6,000 to 7,000 crore. And with a market cap of close to 2 lakh crore, trading at more than 30 times price to earning multiple. So I think it's looking slightly overstretched, although we all know that it's a play on railway growth story in India. But valuation looks very expensive, and I would recommend, if somebody is sitting on a decent gain, I would recommend to book the gain over here. And one more fear which I have here is that the government of India is holding 86% stake in the company. So at any point of time, we may see OFS also coming. So there is a likelihood of OFS also. So if somebody is sitting on gain, one should book the profit. And if somebody want to enter fresh in this company, I would recommend rather than IRFC, some other better place like RVNL, where we have got a very decent visibility in terms of revenue for next 3 to 5 years. So RVNL looks relatively better. But again, RVNL has also run up during the last few days. So buy on dip should be the strategy as far as RVNL is concerned. And on private side, one company which we like is Titagarh Rail. Again, it's a play on wagon growth story of railway. So Titagarh Rail can be one of the stock which one can look at.
Okay. Well, moving on, let's address what's happening in PNC Infratech, because that's the one which has, in fact, plans and laid out plans to sell road assets worth well over 9,000 crores across 4 states. And well, that's the reason why we did see substantial strength through the course of the day today. It's moderated, but we're still seeing a 4% up move, and also at the highest levels in many, many months. The question really is that is this the catch-up play where PNC Infratech is making with respect to a whole host of other infra companies? Because while a lot of analysts on the street did have a positive view on PNC Infratech, it was, or rather it has been a laggard over the past 12 odd months, and now it does seem like there is a little bit of surge coming in here as well. Sunny, your view if you track this one?
Yeah, actually, we like the business. In fact, we are bullish on entire infrastructure space, and with the recent divestment of the road asset, what we feel is that the company is now company can deploy the same cash for further EPC into the EPC business, and we continue to remain constructive on PNC Infra. In addition to that, other infra companies like Nagarjuna Construction, ITD Cementation, J Kumar Infra, PSP project. So entire infrastructure space we are bullish on for with investment horizon of 2 to 3 years.
Right, so that's with regards to where the infrastructure space goes. Moving on from the new listing, a new kid on the block, you have a Jyoti CNC which listed on the bourses in today's day of trade. A 12% premium is what we saw in terms of the listing. We did speak to the management as well, but clearly from what the interaction says is a strong order book is what they're looking at. On the back of the debt repayment, the interest cost is expected to go down, and that is something that will improve the profitability as well. Right now, if you go to see 26-27% is what the stock is seeing in terms of gains. Sunny, what would your view be on a Jyoti Jyoti CNC, someone who would have probably missed the bus in getting allotment, would you advise to enter at current levels?
Again, a very unique business, 10% market share as far as CNC machines is concerned, and have a presence, a very strong presence on export side also. But having said that, what I feel is that the operational performance was not so good during the last 2-3 years, and company has just turned profitable. However, once the debt repayment is done, we may see a reduction in interest cost, and that will aid in profitability. But what I feel is that maybe we should wait for 1 quarter numbers, hear the management about the growth strategy for next 2 to 3 years, and then probably one can add this stock in the portfolio. So wait and watch will be my approach till the time for once first quarter results are out from this company.
Right. So that's with regards to where Jyoti CNC goes. Thank you, Sunny, so much for joining us on the show and sharing your views with regards to the stocks which are seeing some hot moves in today's day of trade. But let's quickly slip into a short break. Lots more lined up from the world of Davos after the break. Please stay tuned.
Well, welcome back. We're very quickly addressing what's happening with Himadri Specialty. We have earnings, and while the revenues look flattish, about 1% growth, looking the bottom line, a whopping 69% growth there. Of course, we're still awaiting the full fine print, and that could perhaps help us understand what's actually gone through and gone down with Himadri Chemicals, whether or not there are in fact some one-offs which are playing in favor of the benchmark and pardon me, the bottom line, along with whether or not there has in fact been a substantial improvement in its operating performance. So that's something that we will continue to keep an eye on. The top line is not encouraging, but the bottom line perhaps more than makes up for the kind of traction that we see in revenues. But we'll move on from there on. And it's day 2 at Davos, and NDTV Network continues to get you the top corporate and political voices from the world, the Economic Forum. NDTV's Vishnu Som spoke to the WEF president, Org Brende, and he started by asking him about national security advisors meet at Davos. Listen in.
We had 80 national security advisors here in Davos yesterday, including the Indian one, looking at are there ways of ending the war in Ukraine, but then based on the UN Charter. It's not going to happen next week, right? But I think it's incredibly important that we don't see further escalations of the wars that are ongoing. Ukraine, Gaza, and now we have a very difficult situation also in the Red Sea, as you know, with the Houthis' attack on all the ships that is passing through one of the most important shipping routes in the world, also bringing oil and goods to India.
Yes, absolutely. Could you tell us a little bit about that? One of the things that the WEF has done is you keep coming up with your own economic outlook. If the Red Sea becomes even more tense, if international trade flows continue to suffer, what sort of macroeconomic scenario are we looking at?
That would, of course, have a negative impact even on the forecast we made for this year. We think that the global economy will grow with 2.9% this year. This is the third year we have to reduce the forecast. We're more optimistic on 2025. But our all worry is that any of these geopolitical conflicts can escalate and spread. And if we see major wars, we see trading routes being interrupted, if we see the oil price going dramatically up, that will also have very negative impact on economic growth. And